So what are some of the things that might actually change how the rest of the year proceeds in terms of housing prices?
Okay, so based on the numbers that we kind of just talked about, we're going to forecast the end of the year what we think. Let's readjust what we're thinking.
What do you think about investors? Do you think more investors have come back to the market this year compared to 2024?
Welcome to the TNT Real Estate Podcast, where we spark conversations that set you up for real estate success. I'm Tyler.
And I'm Tanya, and each week we bring you expert tips on navigating Northern Ontario's real estate market. Whether you're buying, selling, or investing, we've got the tools to help you thrive.
How was your week?
This week wasn't so great, but the week before was awesome because it was our week off.
I haven't seen you in like 10 days.
I know, it feels like forever. Yeah, how was your Canada Day?
It was good.
Did you get your boat out of the driveway?
Yes, we got it out of the driveway, but not into the water.
Not into the water?
Because my boat sometimes doesn't like to work. Uh-oh. And the lake was like crazy windy and wavy, and I was like, I don't want to launch my boat and then be floating down Lake Wanapitei. So
you got some paddles, and you got like lots of kids.
I got paddles, but I got a super heavy boat, so I didn't want to be floating away. So we didn't do it. But it's like right beside the lake, so next weekend we'll try again.
Okay, so if it's less windy, you will take it out.
Yeah, absolutely.
Awesome.
Yeah.
That's great.
Where have you been? Do you want to?
I was in Montreal for Canada Day. And I came back with an awful cold, so I feel really sick right now. So hopefully my brain functions, but I'm not sure if it's going to function too well today because my body is saying otherwise. Yeah, that's what happens when you go to big concerts now. Mm-hmm. You're just around people again, and inevitably you're going to get sick.
Absolutely.
Yeah, but it was a great time. Great time. I love Montreal, had some great food, and it was really nice, really great shows.
Okay, so we're talking about the market today. We're going to review our predictions from the beginning of this year. Did we do them in December last year?
I think we did it January and looked back at 2024. Okay.
And then we predicted what was going to happen in 2025. Mm-hmm. Okay, so now we're halfway through the year. We're early July, and we're going to see where we're landing with our predictions.
Yep. So one of the big predictions that you made was around pricing.
Yes.
We are looking at increasing pricing trend, and you predicted that the average price might actually hit $525 by the end of the year. How do you feel about that prediction?
I feel like it was a bold prediction, considering 2024 was like $475, so it would have been a $50,000 increase. Mm-hmm. We're getting close. I mean, we're very close to, we're 497,000 year to date. So we're getting close, but I don't think we're going to get there because obviously the spring market is now over. It's starting to slow down a little bit. We're going to have a little bit of a blip in September, October again, and then it's going to slow down again. So I don't think we have the runway that we need to get to 525.
Okay, so you're revising your prediction.
I'm revising my prediction.
We did see May, however. We saw May got up over that 525. I believe it was around 536, the average price. But that tends to be our peak every year, our seasonal peak in the market for pricing.
Yeah. And I think it was again this year. June was a little bit lower, still relatively close, but May was definitely the peak this year.
Yeah, I think May was the peak. What's interesting, we're looking back at 2024. Now that we're doing the analysis again, it's interesting to see that June 2024 was actually where it peaked in that year.
And why do you think that happened?
That happened because the Bank of Canada did its first rate cut.
Yes.
Last
so everybody
June.
Got excited and off the bench.
And some of the biggest sale prices too. If you look at Lockerby, that was one of the big ones. It had an average sale price of almost $900,000. It was like $891 for that month of June, which is crazy. And this month it's just under $7,000. So that's, it looks like $100,000 average price drop, but it really isn't. It's just that peak of the market went from to it's typically May to June in 2024.
Yeah.
Yeah.
Oh, that's interesting.
So now I think we're trending sort of a more normal trend this year.
Yeah. So last year you said that the market was going to be more a seller's market than balanced. And I think you obviously hit that right on the head because it's been kind of crazy again.
I think it's interesting to see because, in 2024, we saw a lot of people waiting on the sidelines. As soon as those interest rates were at peak levels and not seeming to come down, people really lost confidence in the market. Yeah. And now with those increased rate drops, people are confident again, and there's a lot of buyers out there.
Yeah.
There's a lot of competition.
But I feel like our story in Sudbury is way different than like if Tanya and Tyler in Toronto are doing this podcast, they're totally different because everything's like extremely slow. We obviously saw a couple numbers saying that there's only like 45 pre-construction condo sales. Like everything has just died around the GTA. And I think out west and out east is about the same. Like everything's just slow. And then Sudbury has this little insulated market where we're still trending very well. And we had a little taste of like the COVID market, which is like, multiple offers and bidding wars and less conditions and a little bit more risk, but I feel like it's trending pretty well for this year.
Yeah, we're definitely an anomaly up here. And I think a lot of it has to do with pricing. You look at those bigger markets, like anywhere in the GTA, Greater Vancouver area, and even like Montreal, those prices for single family detached houses especially are very expensive. We're looking at $1 million plus, whereas in Sudbury here, you can still get an average home for maybe $450,000 to $500,000.
Yeah,
so it's quite a different market, and it's still very affordable. So I think it's definitely a different trend than what you're hearing nationally across the board.
Yeah. Okay, so I'm gonna spit out some stats to you, and you're gonna react to them.
React.
So how do you feel? So far this year, January to the end of June, there's been 1,196 home sales. How do you feel about this?
I think that's good.
Yeah.
I think it's pretty average, is it not? I think has it gone up or down?
It's gone down just a little bit from last year. So we're actually down in the amount of sales that took place this far last year to this year. But obviously the sales price is up because there's more people that want to get in the market, right? So that obviously forces it up. So average sales price of the whole Sudbury Real Estate Board is not $497,000. The median sales price is $491,000. The average days on market is obviously a huge difference. I think last year it was closer to 21 days on market. I'm pretty sure. I'm pretty sure it's 3 weeks. Right now we're sitting at 9 days on market.
That's
which
crazy.
is quick. And most of those are because we're holding offers to allow, the most amount of people to get through before, people start offering. And then the close to list price ratio is 103%, 103.7. So almost 104%, which means an average sales price of 500,000, you have to bid, 560 to be able to get that on average.
And that's up from the year prior, 2024. It was just 101 in June anyway. It was 101.
Yeah.
So that continues to trend upwards. So it's interesting to see less sales, but still higher price range, and still a very strong seller's market overall. Yeah.
And so, at the beginning of the year, we both thought that we were going to have a pretty busy year this year. That's happened. We didn't get to my prediction of 525, but we got to your prediction. Show off of 5% increase, which is
as expected.
Yeah. So do you think this is a hotter market than you expected, or a little bit cooler than you expected?
I feel like it's cooling now. Like I think it was actually really, really hot May. I think May was we saw May was the peak.
Yeah.
And what we experienced in early June was a bit of a slowdown, just like a little bit of a pullback on the activity and the number of competing offers. Because I know I personally listed a couple places in early June, and it was surprising to see how much longer it took to sell and to get an offer, just from a couple weeks prior in May. So I think we're seeing a bit of a slowdown and a little bit more balance.
Yeah, which is kind of typical for the year. Like, kids are out of school in July, August, people are traveling, people are at camp. We see a little bit of a blip in September, early October. And then as soon as the snow starts flying, then everybody hunkers down for the winter. Yeah.
What do you think about investors? Do you think more investors have come back to the market this year compared to 2024?
Yes and no. So one of my predictions was actually that we're going to see a lot of unseasoned investors, mostly throughout COVID, came up, thought they were, dealing with the steel in Sudbury, that, didn't really know what they were getting into, leaving the market. And we're seeing a lot of those, of a couple of my clients that are just we're going to reallocate our funds somewhere else, do, other projects closer to home. So I think I was kind of right with that. Not as many as I thought are selling. But I think we're still kind of trending that way. The multifamily market is still slow year over year, especially. So I think that's kind of the tail of the tape for that anyways.
Yeah. I think we're seeing a lot, just anecdotally, I think I've seen a lot of those single family homes that were turned into duplexes or homes with an in-law suite.
Yeah.
There's a lot of those that have only been owned for about 2 to 3 years that are coming back on the market and reselling. And they're doing generally a lot better than they did even just 2 or 3 years ago.
Yeah.
So those investors are getting out and getting ahead.
Yeah.
They're not really losing any money.
No, not at all.
Ready.
Okay, so based on the numbers that we kind of just talked about, let's forecast the end of the year what we think. Let's readjust what we're thinking. So I'll go first. I think my 525 price point for the real estate board, I think we're not going to hit 525. I think we don't have enough year left to get there, but it will be in my predictions for next year as well. So I'm going to say 510. 510. Yeah. We're like $13,000 away. I think we can get to 510, but I don't think we're going to go much higher because I mean, we have a couple good months left, and then it's going to start slowing down again. So that's my prediction. Where's your price going to?
I don't know. Finish? I feel like 500 is it. Just like 500. That's probably where the max is going to be at the end of the year. Okay. But if it trends upwards, 510, that's so be it.
Yeah,
that'll be good.
We're still in the right range.
One of the big things that I do think is going to happen is our days on market has to increase. Just with things kind of slowing down and people taking a bit more time to buy properties, we're seeing a lot more inspections happening. We're taking more time to do due diligence. And I definitely think that days on market is definitely going to increase.
Okay. Yeah, from 9 to how many?
14.
14? Okay.
Yeah.
So 2 weeks to sell a house.
2 weeks to sell a house
still
on
extremely
average.
Quick, yeah.
Yeah. Because it used to be, 30 days, 28 days was typical.
When I first started, it was like 60 days. If your house wasn't sold in 2 months, then we had to start readjusting.
Like 6-month listings back then too.
Yeah.
I don't need to sign a 6-month listing anymore.
Yeah, sounds
That's
good.
true. So what other predictions? What do we see in some of the key neighborhoods?
I mean, some of the neighborhoods are booming. The Valley this year is probably the talked about story of the year. It's booming. I mean, it's a great place. Obviously, lots of people are moving their families out or upsizing here, and so it is going crazy. I'm gonna just look down for a second. 37% increase in price from last year, and then for just June itself had 24 sales just in June this year, which is a lot. I mean, New Sudbury is always hot. Caperall is having a great year. They're up 22%, which is it's kind of skewed because it's such a small market, but a lot of the nice places on Hannah and the newer areas are selling, which is kind of bumping that up.
Yeah, I've seen a lot of those homes in Caperall go over $400,000, which I think just a year ago they would be going maybe in the low 3s, if they even hit 3.
That's right. Mineral Lake is down just a little bit, down 10%, but it could be just because they have a couple neighborhoods in Mineral Lake that are very expensive. So if one house doesn't sell, then it kind of skews that. But it's down 10% price wise and 31% of sales.
Right.
Which is a little bit different than I would expect. Lockerby, like you were saying, is down price wise, but it's just because
the month over month.
Yeah, that's right.
Yeah.
So, I mean, overall, all of these places are trending pretty well besides the couple outliers, but it could just be month over month instead of the full tape of the whole year.
Yeah,
right?
yeah. I think when we look at the end of the year, we're probably going to be seeing an increase in most of these neighborhoods in terms of pricing and demand. I can definitely see places like Lockerby maybe kind of tempering a little bit and not being so hot, just because the prices have always been so traditionally high that it may be one of those places that sort of slows down by the end of the year once people are kind of settled and in school, and then next spring it'll be crazy again, as always. Yeah,
and so I think my prediction is we're still going to struggle with listings, and so the amount of listings, the amount of sales are both down from 2024 to 2025, and I think that's just going to kind of stay pretty steady all the way through.
I think, we've seen a lot of development happening in the valley, especially. New housing construction is one thing. Those houses are quite high. They're starting around 630, I believe. But they're also building a lot of retirement homes geared to those retirees. So I do believe there'll be some bigger homes coming on the market when people find that right next step rental. I've had quite a few clients looking into those in the valley and in Zilda as well. There's quite a few developments happening. Chelmsford with Devla. And so as retirees move into those types of retirement homes, then they'll be putting their homes on the market. So I'm hoping there'll be some more inventory coming this fall as people sort of settle in and make decisions on, especially with the snowbirds too, because they can go to these places, they can lock the key and go away. But we'll see where they go this winter, right? Because it could be different. Maybe they won't be going to Florida.
Just skip over Florida.
So what are some of the things that might actually change how the rest of the year proceeds in terms of housing prices? And mortgage rates is one of the things that sort of seems to drive our industry as well. Yeah.
So I don't think mortgage rates are going to change that much. There might be, another small increase or decrease, but I think it's not even something that's really on my radar right now, because I think they're just going to do, they're just going to stay status quo. I think inventory can obviously change a lot of things. And we had a big month in June of the amount of listings coming to the market. So I think if that keeps up, we might have a slowdown in price or I guess more choices for people that are looking. But I don't think, besides those two, that's why I think we're kind of just going to stay status quo. I don't think there's going to be that much changing.
Yeah. Sounds good. Slow and steady. Feels calm. Yeah. It's interesting because last year, all the talk was about interest rates. And that interest rate talk really affected consumer confidence and people moving into the market or making a decision to make a move in the market or not. Whereas this year, now it feels that, we started the year with the tariff talk and all this sort of up and down and a little bit of lack of confidence there in the market. But now, like you said, I feel like we're just a little steady pace. And as long as interest rates remain stable enough, people's confidence should remain stable, and our market should stay stable, and our predictions should be 100% accurate.
Sort of, kind of. My new prediction should be 100% accurate. My last one was off just a little bit. I was close.
You're very optimistic.
Yeah, and it was actually a lot hotter of a market than I was expecting. So I thought we were going to get there, but we're not trending.
Well, you never know. We'll see what happens.
We'll see what happens. Absolutely.
Thanks for tuning into the TNT podcast. If you've enjoyed today's episode, don't forget to leave us a comment, subscribe, and share with a friend who might be interested in real estate.
We'll catch you next time, and until then, stay ahead in real estate.